Market open, it seems like we're going to manage to hold through that 9,300 mark, at least the start of trade with. That is what the pre-open rates as well as the SGX Nifty are indicating. It would be imperative to see whether there's a follow-through come in on banks or not, and whether they're continuing their uptake. Axis Bank, remember, held out by a solid 13% in trade yesterday. That was the case with Bandhan as well. ICICI Bank put on a very strong show. It was a 9% move coming in ICICI Bank as well, and that was the case with the Bank Nifty putting on 7% higher. A couple of other stocks which are going to be in focus today. Just look out for Reliance RITES as well. There's been a 1.1 crore shares block deal which has happened at the price level of 200 in the pre-market block itself. There you go, 93.50 on the Nifty right now. I want to check in on what Manappuram Finance may be up to. Very strong commentary coming in and a very positive brokerage note as well. This morning, United Spirits should be reacting to its numbers. The results have been below estimates. The PAT has been impacted by taxes. Having said that, while the volume contracted by about 13.5%, the balance sheet repair is something that is positive. The con call, of course, is going to be later today. So let's see what really comes out of that. VRL Logistics as well, seems that there's been a mass exodus of drivers which has affected the business. The company now expects to post a significant loss for the quarter ending June 2020. So look out for that as well. We've been seeing some sporadic action in auto ancillaries. News on Bharat Forge. The German operations have restarted from the month of May. North American and Sweden at suboptimal utilization, however. So look out for some of these names as well. SBI, they're going to be extending the moratorium by another 3 months in the loan accounts of all eligible customers. So look out for this particular stock as well. And Adani Power, which has also been showing you traction of late. PPA with the MP government for procurement of 1230 megawatt of electricity on long-term basis should turn out to be positive. AB Fashion also came out with its numbers. The results have been in line with estimates. And then Dabur was a howler. So let's check in on that stock as well and where that may be headed in trade today. Some of the key numbers today, you're going to be looking out for what CEAT does. You also have TVS Motors, Federal Bank, and then Lupin from within the pharma universe reporting its numbers today. Those stocks are going to be important. Let's also check in on what Reliance is up to, a fresh check coming its way, and then Bharti as well, whether the overhang of the promoter selling is now done with on the stock price. Those two stocks will just come up for you on your screens too. All in all, it's a comfortable start, Nikunj, but expiry days, so we really need to see whether these rates actually stick by.
And I will watch out for the banks, Aisha. Why? Because is the short covering done? Is that one-time comfort which market derived because of Kotak Mahindra Bank, QIP and buzz of fundraising in Axis Bank, which is an endorsement of the long haul sovereign guys, real classic capital allocators coming back into some of the private banks? Is that, that in a sense really gave a spring in the stride for the bulls and especially for some of the banking bulls? Is that inertia going to last, or will that inertia now soon fade away? Manish Gunmani joins us now. I always look forward to engaging conversations because he's got a range of topics which he always shares his view on. So Manish, fantastic to have you back. Thank you for joining us. Manish, I can easily divide the world into two: the optimists who believe that economy will recover in the second half, vaccine will be discovered, and India will benefit because of crude. And then you got the realists, not pessimists, but the realists who feel that economy is in a long, slow, but a painful patch. Nothing will come this year on the vaccine front, and despite the odds, markets currently do not offer great value. Which camp are you in? The realistic camp or the optimistic camp?
Well, Nikunj, actually, let me give you a nuanced view. Actually, see, I don't know about the economy, what pace it will come back, but I'm just saying that the ask rate of a lot of stocks is not very high, in the sense that what you're saying is whether the economy will come back in 1 year or not. I'm saying if you start from the other perspective, that what are the stocks building, what are the auto stocks building in, what are the retailing stocks building in, what are maybe the bank stocks. I think banking is a bit more tricky, but a lot of these cement stocks maybe, even if the economy comes back in 2-3 years, you will get 50 to 100% return. So unless there is a structural change in consumer behavior because of this crisis, and that to my mind, can only happen in some very niche segments that you can debate that multiplexes may get disrupted or whatever. But clearly in cements or commercial vehicles or retailing, I don't think anything structural is going to change. So the point is, to my mind, the next 6 months, 12 months, maybe even 18 months may look very, very tricky and pessimistic on the economy. But I think stocks build in a discounted cash flow of 20, 30 years. So whether 1 or 2 years really should not affect the intrinsic value of stock as long as they can survive. Now, which is why my view has been that the easier call is to buy operating leverage. The trickier call is the banks and the financial leverage stocks. Because obviously, you will make much more money on them if you get it right. But that is something, I think there you have to just calibrate, seeing how the global economy is doing, how are virus cases in India, and then maybe you buy when you see some clarity. But where you have debt-free balance sheet in a lot of these cyclical sectors like cement, auto, and all, I think you can afford not to wait for good news, assuming that at least economic activity 2 years down the line will be the same which was there in FY20 pre-COVID, and still get maybe 40, 50, 70% return.